All right, folks, I am JD Van Gilder with your Home Sold Guaranteed Realty. Today I am joined by Andrew Yakey. He is with Knock, and we are going to go over a few things that you can do to buy your new home before selling your current home. What I'm going to do at first is just kind of go over the things that we're going to be talking about in this meeting. Now, so let's say you're outgrow your current home. Your family's getting bigger, you've got to move into something new, or you're relocating to an area, you've got to relocate, whatever the case may be. You got options. You can sell first, sell and buy simultaneously, which is, believe it or not, what happens generally. Or you can hold the first home as an investment property if you have the means to do that, which is a good option. But what if you could find your new home, buy it first, fix up your old home, and then sell it for maximum profit? That's really what we're going to be talking about today, and it's a service offered through Knock. It's really a fantastic program. So let's get into this a little bit. Topics I'm going to go through, just going to go through some pros and cons of selling first, pros and cons of buying first, the pros and cons of buying and selling simultaneously, and then a little bit about keeping your home as an investment property, which is something that I do myself. I do a lot of investing, so we can work through the ins and outs of that if you are truly looking to have an investment property. It's a good way to build your portfolio, but you have to be in a position to do that, and not a lot of people want to do that. So it is an option. Or we can go through Knock is the only lender that I'm aware of that has a program where you can buy first, then sell without paying two mortgages. And the program that offers that is Knock Home Swap. And they have another program called Knock Go, which is guaranteed offer. We'll go over a few details of that program as well. Now, if you're selling first, obviously the pro for that is that you have total use of the equity in your current home. You're selling this, you've got the equity then to put down on your new home. But the cons is you have to sell a home while you're living in it. It's not that easy. Harder to keep things show ready. You've got maybe you've got kids, they're coming home from school, they got toys all over the place, dog running in and out. There's all kinds of reasons why you can't have this thing looking like a model house 24/7. So that's a taxing operation. And then where do you live when your home sells? If you've got family you can live with for a short stint until you find your new home, that may be an option. Or you can rent for a while, but rental prices are higher than mortgage prices, so that's an extra expense. You may have to store your items in a storage facility, which is going to be costly to keep things in storage until you find your new home. So buying first is generally a good option. Some people don't have enough equity or money saved to do this, make this a valid option, because you'll have to have down payment monies, closing cost monies, and everything up front. If you have the option to do this, there are a lot more pros. You can identify the right home on your timeline. You don't have to worry about keeping your current home in show condition because you're not selling it at the same time. And then you're able to move your furniture at your own pace. Then you fix it up, you sell your home after the fact, or you keep it as an a rental property. Well, and the cons to that is you have to pay two mortgages. Maybe there's HOA fees, utility costs, lawn care, pools, whatever the case may be. You have to keep your both homes up and running financially. So there's added expense with that. And you won't have the money from your current home to put down on your new home. So your available funds is less to make this new purchase. Buying and selling simultaneously, which is quite honestly what a lot of people do. And it's difficult to do that in today's market because if you have a contingency on to sell your home in order to buy another home, these sellers might have two or three other offers in waiting and they don't have a home to sell. So they're going to choose the path of least resistance. It's just the nature of how the sales process goes. So the pro from obviously doing that is you do have all the equity from your current home. But then the cons are the same with selling first. You have to have this home ready to go, and you're living in it at the same time. Less time on your hands because you are also looking for a new home in the process. All offers are contingent upon the sale of your house. Like I just mentioned, it's difficult to get an offer accepted if you also have your house to sell. We have done that, and we can walk through that process if that happens to be an option. We do get offers accepted in that situation, but it's a much harder sale if you have a home to sell, and it's contingent upon that home selling in order for you to make that purchase. And then another factor with this is you have to coordinate your moving on the same day. You're moving out of one home into another. You've got moving trucks. Maybe you have to have multiple moving trucks because it all has to be done in a day, or two. At least your stuff has to be out of the house and into the new house within a few days. So that's a little bit taxing. And may still have to get a storage unit to store the items so that you don't have to have two trucks or whatever the case may be. Get family and friends to help you. It can be a difficult process. Another thing that I do honestly encourage with a lot of homeowners is trying to keep your current home as an investment property, because it is a good way to earn income, have a good stream of income. In fact, I recommend to people, if you have the means to do it, buy a home every single year. If you could buy one home a year and keep that as a rental, as long as it has positive cash flow, then in your retirement years, you could sell one home a year and have all of that money tax-free. Remember, I said that tax-free. The only thing you have to, or not, and I'm sorry, equity, if you get out loans, it's tax-free. You only have to worry about paying the interest rate. But if you're selling those homes off, you do have to do capital gains tax. So I'm sorry, not tax-free. That's only when you do a home equity loan. But if you have a sufficient equity in your current home, you could get out a line of credit or an equity line and purchase your new home and keep that other home as an investment. But you have to make sure that it has positive cash flow. If you have positive cash flow through this, working through the lease payments, then that won't be counted against you as a liability. It will be an asset because it's bringing in money. The home that you live in, a lot of people consider that an asset, but if it costs you money every month and it's not bringing in any money, it's a liability. You're paying money to live in this house. It may be earning equity that you can capitalize on and get out a home equity loan or do something like that. But if it's not bringing you money into your pocket, it's a liability. So a lot of what you're taught in financial classes is that you list off your homes as assets and things like that, but it's not bringing in positive cash flow. It's a liability. But always doing a property as an investment is a good option if you have the means to do that. Of course, if you were to go down that route, I would recommend getting a good property management company, because trying to manage it yourself can be an absolute nightmare. With any little problem that comes up, there's also added expenses. As things wear out, you need to replace those. So some people don't want the headache of doing that, and I completely understand that. So that's not the option that everybody would want to take. So what do you do in those situations? Well, we have like a year or so ago, I learned about knock, and I learned about the home swap program that they had. At the time, they were not available in Florida. So I could not take advantage of that and bring this to my clients as an option. And now that they are in Florida, I am pleased to bring this as an option for you. So this has some bullet points of the Knox home swap program, but I'm going to let Andrew really talk about these details so that we can get it directly from him.
I appreciate it. So one of the things that I like to say is Knock has come up with the modern solution to the hassles of conventional lending. Our whole philosophy is allowing you to buy your next home first, while living in the comfort of your existing home with a non-contingent capability. So that way you're able to find the place that you want. You don't have to worry about renting or moving multiple times. And then you get to access that equity as if you've already sold your home. So it has a whole bunch of additional benefits that will be able to make it so that way you don't have to pay two mortgages at the same time. So one of the things, and he has here on the list, up to 20% of the down payment on the new home. Well, you can do 3, 5, 10, 15% down. Will allow you access to the equity up to 20% for that down payment. As you can see there, that was my assistant, my 9-year-old. Um, that 20% down payment assistance, you can actually is coming from your equity, or what we call the equity position of your home. And when we talk about equity position, we're talking about what your house is valued at versus what you owe on it. That equity position is how we come up with this equity advance to do this. Now, several things that you would want to do if you had your equity ahead of time. What if you could update your current home so that way it gets top dollar on the market? Well, this program allows access up to $25,000 to do that. Maybe it needs, paint, carpet, hardwoods replaced. Maybe it's just fixtures, something small. Maybe they need to stage it in order for you to get that top dollar. John and his team will be able to do that for you with this particular program. You can roll your closing costs into it. This way, the true out of pocket that you have is only your appraisal, only your inspection, only any additional earnest money that you want to put down. We've added a couple additional features that aren't listed here, and literally they haven't launched officially yet, but I would like to introduce them here tonight. We actually now allow you to use that equity advance to be able to pay off your debt, to lower your debt to income ratio so you can get a better interest rate. Right now, rates are going up. Well, we have a solution for that. We'll actually allow you to use your equity in your current home before you even sell it to buy down your rate. And the last part, you're in Florida, your market is very, very competitive. Well, guess what? What if that property you're going for, you need to have an extra $5, $10, $15,000 over what the appraised value is going to be in order to win that property? This program allows you to use your equity before you sell your home in order to secure and win. What that means is John and his team is going to be able to win more of the options for you, more ability of those contracts to have that ability to say, go for 15 on a $400,000 house and win that contract. So that way you win the house that you want. And the best part is this is all interest free and it's for 6 months. So what that means is we are your lender on the new property. And then after 6 months of you moved into your new property, that's when your equity advance becomes due. But you've already sold your home in that time frame. And that way it's a low cost solution that gives you lots of different options throughout the business. John, do you
Like
have
the
any
fact
questions?
that oh yeah, I like the fact that you mentioned that, Andrew. I'm going to cut in there a little bit because the getting the home ready to sell is a good feature. Like I said earlier, if you're trying to you're trying to sell a home that you're living in, you can't keep it show ready. Maybe it needs a little bit of paint, or maybe it needs some minor repairs. Any of the repairs that we recommend, it has to pass the test of return on investment. We're not going to. There's a lot of things that can improve the value of a home, but we're not going to recommend that you do something that's not going to yield more than it costs for you to do it, considering time and money. If it's not going to get 2 to 3x what it's going to cost you, then we're not going to recommend that repair.
And the great part about the program is it's customizable. You can use any part, all the parts, or just one of the parts of the program, whatever benefits you. What I like to say is the Knock Home Swap has 7 pillars of benefit, and get with John, he'll be able to provide those 7 pillars of benefit of the program to you. John, did you want me to go through the different costs associated with the program?
Actually, yes, Andrew, if you would. So this is kind of a breakdown of some of the cost, and if you could explain those a little bit, that would be incredible.
Absolutely. So when you think of a lender and which lender you're going to choose, I will go ahead and tell you, I suggest that you get approved by multiple lenders. Why? Because you want to have options for you and your family and to have the best solution there for you. So we as a lender only have two fees that we charge. We charge a $1,700 processing and underwriting. It's our administration fee. National average for processing and underwriting is around $2,000. The other fee that we charge is a 1.25% convenience fee that's based upon the purchase price of the new home. Now, most folks see that as an origination fee. An origination fee is a fee by a lender to facilitate the closing of that loan and to do the loan for you. Well, our program does not have any origination fees. We have a convenience fee to give you access to the program. Our convenience fee actually has value because origination fee does not give you access to being non-contingent. An origination fee does not give you the ability to use your existing equity towards your down payment, towards your closing cost, towards up to $25,000 in home prep funds. It doesn't give you up to $25,000 to pay off existing debt. It doesn't allow you to buy down your rate. All these different things, that's what that convenience fee gives you additional benefit of being able to access and use our program.
I like that. I like the fact that you are now allowing to buy down the rate because, as you stated, the rates are going up, and nobody likes that. And if you look at the buy down rate, you have to think about the how much the interest is going to cost you over the life of the loan. You're going to save thousands and thousands of dollars, tens of thousands of dollars by just buying down the rate and paying a few $1,000s up front on that. Maybe you're paying 1 or 2 points on this loan, and it's going to save you a lot of money. So buying down the rate is an excellent option that you guys are adding there.
And what you just said is that out of pocket part, that all comes from the equity advance. Once again, you'd only pay for your appraisal, your inspection, and any additional earnest money out of pocket. The rest of that can be pulled out of your equity advance, that equity you've already built in your home.
Right. So what I have had frequently is some questions about the home swap program, and so one of those is, what if I'm moving out of state? And I know that you guys have no problem with that, but they do have to be moving into a state where you are working. It doesn't have to be a particular city, but as long as they are moving to a state where you guys are located. Is that correct?
That is correct. We're located in 17 different states right now and in over 75 different markets.
Okay. Yeah, and that just keeps growing. As I stated when we first started this webinar, when I first learned about knock, they were not in Florida. I was learning about it from an agent friend of mine out in Colorado, and I was pleased when they were in Florida. And you guys are continuing to increase that market share. Right now, I know you're in Georgia, Florida, Colorado, but I don't know most of the other states. Do you have that list available?
Yes, I can. Give me 6 seconds and I will be able to give that to you. But when you think about that, in addition to that, we started off January of last year in 8 markets. We ended the year this year in over 75. So we're growing at an exponential rate to be able to cover and help facilitate this. Whether you're moving in state or out of state, we're going to be able to, most cases, be able to assist in some way.
All right. I like that.
So the cities that we're in right now, or the states, we have Washington, we have Oregon, California, Arizona, Texas, Florida, Georgia, South Carolina, North Carolina, Tennessee, Maryland, Illinois, Michigan, Minnesota, and Colorado.
Wow, that's quite a bit. And continuing to grow. I'm anxious to see where else this is going. Also, I get asked about buying and selling limits. What are the limitations on cost and sale price of homes?
So one of the things, we have recently gone into the jumbo market. So the price point is up to, the new home that you can purchase is up to 300 million.
Oh,
with our
my
particular
goodness.
program. So literally, we have just rolled this out in the last week and a half. So it's one of those things that you now have the ability to, regardless of what type of property you're looking at, we are able to help in most cases. This is also true for that buy and sell feature. So let's say you own a property and you want to use that equity to buy that next $1 million property. Well, we'll actually lend up to $650,000 in that equity advance, meaning you can use that money towards that purchase of that next home in order to secure your dream home. And John and his team will be able to help you with that. I see that you have on here the can I buy new construction with the home swap?
Yes.
That is very much a very hot topic right now. And yes, the caveat or the things about the home swap that we need to know, it cannot be where you have a builder that you buy a piece of land that's by itself, it's not in a design community, and you're building a custom home where it is a construction to perm loan, meaning you pay as you go, you get a construction loan in order to finish it. This is where you would put a deposit down, and then when the builder finishes the property, we would then do the purchase finance, which about 90% of the builders currently are doing that methodology. So yes, you can do that. It's very simple. Even with this, you get to live in the comfort of your own home while your next one's being built. Move into that new home and move your stuff on your own terms. The 6 months still applies. Now, the great part about this is, let's say that build is 9 months out. Well,
Right.
any other Freddie Mac and Fannie Mae lender, we just verify credit worthiness every 90 days and verify income. You don't have to start the process over. You have your pre-approval the entire time, and your 6 months doesn't start until that you close on the new home. So even if it's 6 months out, you'd have another 6 months after that in order to do it. So remember, your clock does not start until you purchase your new home.
That is very good to know. And like you said, the selling limits were, since you guys started doing jumbo loans, that is new to me as well, because I know that the limits used to be around 1 to 2 million were what the limits were, I believe.
1.2 million was our limit on the in certain markets, Southern California and also parts of Florida, Colorado. They had limits there of that amount. But right now, with the ability of what we're able to do now with the jumbos, we can go up to 3 million.
Wow, that's great. Good to know. Absolutely. So as far as the knock go program, guaranteed offer, I believe this is something that you guys offer that gets the buyer pre-approved. It goes through full underwriting, and this is a case where they don't have a home to sell. This is just something that you do so that we can compete with those cash offers and get a fully qualified home buyer into a home. Is this correct?
That is absolutely correct. One of the great things about this program is the peace of mind that's associated with it. When you speak to your client, they have that fully pre-approved, underwritten pre-approval letter. They know their term, they know their rate, they know what their monthly payment's going to be. They know also that they have a guaranteed 30-day hard close date, meaning if something comes back on with a traditional lender where they would have to push the closing, there won't be any push. We will close it with our financing, meaning that we will go ahead and do it after the fact. That way you can win more often. Going to a seller and saying, not only is this client cash back, John and his team are going to have no kind of financing contingency, and be able to tell them that we will be able to close in 30 days, regardless of whether we have everything straight with the financing, because it's already pre-approved. It allows you to be more competitive and also to compete with those cash folks. It's a much stronger offer because it is fully underwritten. Now, like he has on here, if it's not 100% clear to close, we do not move that closing date. We will give you that hard date. And there's another part in there, the refund cost of their appraisal. So when you think about an appraisal, if an appraisal comes back short and you decide not to move forward, we still have the appraisal contingency in there. So that way you can back out of it if you want. And If you spent up to $1,000 for that, we will be able to take care of that appraisal. So that way you're not out of that money. It truly allows you to have the flexibility to shop, find what you want, and execute on it, and be in a position to win.
That is an incredible benefit having this. And I just want to explain a little bit about the going through underwriting. Typically, what a lender will do is they base the underwriting on the property. It doesn't go through underwriting until you're maybe 15 to 20 days into the sale process. Then there might be some issues with that. They need more documentation. They need, and sometimes this will lead, as Andrew stated, to a delay in closing. We just had a similar situation happen to a sale on our team. This eliminates that because it's going through underwriting upfront. You're approved for a dollar amount, not necessarily based on that house, but what your financial situation is. So very key feature as far as getting uh, in a competitive position with a cash buyer, because right now, especially here in Florida, we're running into a lot of cash buyers winning these sales because they don't have the loan contingency. So this program eliminates that and makes you a very competitive buyer.
And another thing, the underwriting for that is 72 hours from the last document uploaded, meaning this isn't a long drawn out process 15 days into it that you will find out. Within 3 days, once you've uploaded the last documents, you will have your underwritten, pre-approved offer letter to be able to go and compete. It's not one of those things that could be weeks and things like that. It's actually very quick process. And that peace of mind knowing from the beginning is probably the most important part in my, retrospect, is because I remember the first house I had built, I had to buy. The frustration and the anxiety associated with am I going to get approved and things like that. This eliminates all of it. From the beginning, you're already going into that situation where you're bidding on that home, knowing that you have a guaranteed offer and you're able to back that up and be able to close on it. It's a much different process. We're trying to eliminate that anxiety with it.
Yeah, absolutely. I love it. It's definitely a good option and loan program. What and this is a little bit about the cost on that. Can you explain some of the cost on Not Go?
Yes. Well, one of the things with both of our programs, our rates are going to be competitive with all the national lenders. So our rates are not increased for that. For the home swap, because we charge the convenience fee, that's how we make our money, because we're doing two loans. This one here, we only have a 1,450 processing and underwriting. There is no origination. There is no program fee. There is no convenience fee. This is truly going to make it so that more individuals can enter the marketplace, because their closing cost is going to be much lower. The upfront out of pocket is going to be much lower. It gives you the ability to have a solution that makes you cash back with a guaranteed close at a very competitive price point.
Absolutely. Now, I just as far as Not Go, and I'm sure that the home swap has similar requirements for credit, but as you can see, for these programs, there obviously are some requirements for this, and I noticed that you are doing the jumbo loans but now, but VA and FHA are not applicable for this program, correct?
No, it is not applicable because of the way it's set up. VA technically is what the way we have it set up is Freddie Mac and Fannie Mae, with our particular loan requirements, our investors will not allow us to do either one of those at this time. But 9 times out of 10, if you're able to get approved for a VA or an FHA, you can, as long as you have these credit scores, a 620 plus for conforming and 820 plus for jumbo. The other part is having your debt to income ratio between the 35% and 45% range. That number there gives you a lot more flexibility and should be able to get you approved for conforming. If you're approved for one of the other ones, and you have those scores and that debt to income ratio, you should be able to be approved for a conventional loan. And if not, we'll be able to let you know why. Now,
Okay.
one thing I see here, it says or modular home. This has to be single family. It has to be a stick built property. It cannot be modular, mobile, or it cannot be zoned anything other than residential.
Right. I did see a caveat on there. I thought that said you could buy a 1 to 4 home property as long as you are the primary on one of those. If you have a duplex, you are at least a primary on one of those. Is this correct?
Yes, you can purchase. If your home originates, if you're doing the home swap, you would not be able to purchase one of those because the listing property that you live in currently cannot be used, it cannot be a multiplex. But for this, you can do a where you're purchasing 1, 2, 3, 4, whatever it is, multiplex. You are able to do that with either the Go or the home swap program. Purchase either one.
Okay, good to know. Now, as far as that goes, that's kind of the end of what we had to talk about with knock, swap, and go. Of course, if you want references on any of this, you want to contact me or my team. It's the top email address here, yhsgrpioneer.com. And of course, you can get some details on your own at knock.com. They do have some good information about the programs that they offer. There's, of course, home swap and go, but I think you guys do have some other uh, options that you have available. Is this correct?
We are a traditional lender, so we do all of the normal traditional lending. But these particular two programs do not do FHA. They do not do VA. Um, these are specialty programs that have specialty rules associated with them. But think of us as the regular lender that's down the street from you. The difference is we're providing a much more beneficial solution to you as a client. Now, I would say this, even when you go to the resources and everything for the knock.com, always go to JD and his team to talk to them and go through them. They can set up consultations with myself so we can take a look at your individual particular situation, answer the questions that are relevant to you, and also maybe even get the loan advisor on to be able to make sure that it makes sense for you to proceed with us as a program. But I want to just put that out there to always go through JD and his team.
All right, I appreciate that, Andrew. And we are, as I don't know that I mentioned this at the onset of this, but knock requires that agents be knock certified to go through their program. Our brokerage is knock certified. All of the agents are knock certified, so we are very familiar with these programs. We would be happy to discuss any of these options with you. Our contact information is obviously listed right here. You can go to our website. Our direct number is the 284-8159. My personal cell number is listed on this as well as my email. If you have questions that you would like to directly ask Andrew, his contact number and email are here as well. So we encourage you to think about your options. If you're questioning what exactly would be the best option for you, maybe you have questions about the home swap or the Go program, the guaranteed offer, just don't hesitate to reach out to us. We can certainly answer any of your questions and help you walk through these options. We are happy to do that and look forward to talking with you.
And I would say this last part, like he was saying, talk to us, but look at it this way. There is no application fee and we do not collect, and there is no commitment to us to anything until you close on the new home. So you can truly find out where you are sitting position wise, free of charge. So that way, you know whether or not this makes sense for you. Instead of thinking hypotheticals, you actually have real numbers that work with your budget and where you're at. So you know what you can and cannot do. It's a very powerful thing to be able to have that. And we provide that service free.
All right, this is excellent information. Now, I don't see any questions in the chat. if anybody does have any questions, feel free to put those in the chat. I'll look for a minute to see if there's anything you want to talk about. But other than that, I appreciate you coming on and explaining these programs to us, Andrew. It's been educational.
Absolutely, JD, and I do appreciate your partnership and your team's partnership. I look forward to working with you in the future a lot more.
All right. Well, I don't see any questions in the chat, so I think we're going to sign off for now. Andrew, again, thank you, sir, and we'll stay in touch.
Have a great one. Talk to you
All
later.
righty. Bye-bye.